if you're a public investor, a public company, a public official, your safe harbor, your safe place is Bitcoin as property. Not Bitcoin as a medium of exchange, but Bitcoin as a store of value. I'm going to buy it, hold it for a decade. That's a clear place. If you're a tech VC, a crypto venture capitalist, I mean, who's going to dominate stable coins? Who's going to dominate digital platforms? Who's going to dominate, what's the cool, DeFi swap exchange? You can play that, but you have to understand the competition, the regulation, the security issues, and it's a lot more complicated. And if you're a speculator, you're a speculator. Dogecoin versus Shibcoin, that's speculation.
Knock yourself out.
Michael Saylor, who is CEO of MicroStrategy and noted Bitcoin proselytizer, recently updated about the current events happening in the Bitcoin space. Saylor spoke about the recent issue of banning Bitcoin and claimed that it would be a regrettable mistake. This was in response to EU politicians who were considering outlawing the world's oldest cryptocurrency within the region through the upcoming Markets in Crypto Assets framework. Not only this, but Saylor also termed this as a $1 trillion mistake, leading to terrible consequences. Hello and welcome to Money Talks. Today, Michael Saylor talks about Bitcoin as a dominant asset, use cases of Bitcoin, rising inflation, and identifying smart investment options available out there. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
The least risky of these things is digital property. Bitcoin's the dominant digital property. It's a common property. It's not a security. It's acknowledged as not a security. That makes it ethical for a public official to endorse it without a conflict of interest. If you're the mayor of Miami, or you're the governor of New York, or you're a senator or congressman, or the head of a country, and you stood up and said, I think everybody should have a chicken in every pot, a farm, a house, some land, and some Bitcoin. You just said the same thing. You said, I'm endorsing food as property, land as property, house as property, a synthetic digital asset as property, live happily ever after. It's a better store of value than the US dollar, than the peso, than the bolivar. So I think Bitcoin has got some clarity there. If in the use case is property, buy it as property. If you sell it or transfer it, you owe a capital gains tax, a loss, a gain, or whatever. That's been decided. Are there other digital properties? Well, I mean, the Bitcoin forks are 1% of Bitcoin. They've failed. There's a lot of question about, is there any other digital property? I would not endorse any other digital property other than Bitcoin because everything else is murky.
Saylor also argued that Bitcoin was superior to gold in that one could charge rent on it, or what the industry calls staking, and was transportable in the event of geopolitical crises. Saylor posed a rhetorical question to the audience. What if there's a war, and what if you own a building in Kiev or Moscow right now?
So my forecast there is all the strong currencies of the world, which are the dollar, the euro, and then all the currencies pegged to the dollar, the DRAM, etc. All of those currencies lose 15% of their purchasing power a year for quite a while. The second-tier currencies are losing double that. They're losing 30% of their purchasing power a year, and they're just weakening against the dollar. And you can see it. And then the third-tier currencies are losing anywhere 50% to 100%. Well, they're running 50 to 100% inflation. You can see that in Argentina right now. And the indicia of the weakest currencies is either nominal inflation is diverging from the black market inflation. The official exchange rate of the peso is 100 peso to the dollar, but the blue market rate hit 210 pesos to the dollar the other day. And 36 months ago, it was 15 pesos to the dollar. And 15 years ago, it was 2 pesos to the dollar. And I remember when it was 1 peso to the dollar. So the weakest currencies are going to have capital controls. On one night, the government sends a fax memo, and they convert everybody's dollars to pesos. The next day, they devalue the peso 10-1. The next day, they hand me back 1/10 of the money I had, and that's under a capital control. That's what happens in an environment where you don't trust the bank. So people that are concerned about that, they want to own digital currency. They want to swap their lira or their Lebanese pounds or their Argentine pesos or their bolivars to Tether or to a Circle or whatever stable coin. But you're not going to see Amazon and IBM and Microsoft do tens of billions of dollars of cross-border remittances with a stable coin unless it's issued by an FDIC insured institution. So corporate treasury usage and retail remittances require a government endorsement. And so I think with digital currency, we're waiting for that government-endorsed digital currency. When El Salvador endorsed this stuff, you saw 3 million people download a wallet within 4 weeks. Mm-hmm. And that's half the country. So I think that there's a demand for that, but there's a question of who can issue a stable coin. The world wants $10 trillion worth of US dollars. If they get it, 100 currencies will collapse, and we'll have a dozen strong currencies that will exist. And nobody in Asia or nobody in Africa is going to use any currency other than the dollar unless they're forced, right? So that's the second innovation, and we're working to get through that adoption phase. The third innovation is I can issue a token or a security really fast, maybe, and trade it with high velocity. We're waiting to get guidance on, well, how do I issue a compliant token? You know, how do I do that? Apple can ship a new product to 1 billion people overnight for a nickel. Okay? They have a chance. Mm-hmm. Right? And then I would buy digital property as Bitcoin. Bitcoin is the dominant digital property. There may be other digital properties that will form. You know, I'm not comfortable with them enough to recommend them. But I think that Bitcoin meets a need for everybody in the world. If you want to have a non-sovereign, non-cash derivative store of value beyond the control of any government or any company that is not a security, that is on an open permissionless network that you can trade 24/7, 365, that checks a lot of boxes for a lot of investors. If you think that 5% of the world wants it, then having 5% of it in your portfolio is rational. 1%, 10%, some amount. I think everybody's got to make that decision based upon their risk tolerance and their portfolio, charter.
Additionally, Bitcoin mining operations have been under scrutiny from multiple nations for a while now. This is because Bitcoin uses the proof-of-work consensus mechanism that is notoriously energy-intensive. Instead of an outright ban, the members of the European Parliament, or MEPs, have proposed to include sustainable activities that are part of crypto mining operations in the EU taxonomy, a classification system, by January 1st, 2025. Besides environmental issues, the MEPs have also voted in favor of alternative provisions in the markets in crypto assets, or MiCA framework. As if in anticipation of more bad news, Bitcoin had lost 2% in a fall below $38,000 hours ago. However, the situation changed once Elon Musk reaffirmed his support for Bitcoin, saying earlier that he will not sell his cryptocurrency holdings. Bitcoin jumped about $1,000 recently and currently sits around $39,000. The billionaire also outlined the assets that should perform well while inflation skyrockets. So what are your thoughts about the new draft law proposed by the European Union? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.